What's up everyone, it's Karthik with MoneyVest. So hope you're doing great. We got lots to unpack in this video because we've got Jerome Powell's testimony coming up tomorrow as well. He just gave us some hints related to inflation, interest rates, and of course unemployment and GDP. A lot of questions were asked directly at Jerome Powell. Senator Elizabeth Warren getting, of course, a lot more frustrated with Jerome Powell. That was quite an interesting exchange. Inflation numbers are scheduled for Thursday, and we also did have the unemployment numbers from last week. NVDA, Tesla, Apple, three of the most heavily shorted big large cap tech companies, and now shorts are obviously getting burned on those positions, with Bill Ackman also launching its first ever closed-end fund, which is probably going to be the biggest ever in the United States. So we got lots to discuss and lots to unpack in this video. As always, if you enjoy it, find it helpful, make sure that you drop a like. Subscribe to the channel if you haven't already. I would really appreciate that. And links to our Discord and Patreon is going to be down below. If you want to get access to the entire MoneyVest platform, you can access with the link down below. There is a 51% discount that we're offering. You can access up to over 17,000 stocks with 20 plus years of historical financial data, up to 10 years of future revenue and EPS forecasts. Calculate your own intrinsic value and your fair values and price targets. And we give you all the tools and the accessibility to the entire platform to do your full comprehensive fundamental analysis on individual stocks. This is a platform that's a work in progress. I'm going to continue to build this with my team and really take your feedback into consideration, your suggestions into consideration as well. So links going to be down below. If you have any questions, please let me know, and we'd love to have you on board. And again, there's a 51% discount. You can lock this price in for life until, of course, you cancel. So high inflation no longer the only risk for the U.S. economy. Now, Jerome Powell had very interesting comments during the testimony in front of Congress at the semi-annual monetary policy on housing and urban affairs. He essentially said and mentioned that, look, we haven't really gotten that greater confidence that inflation is indeed moving closer to 2% to our target, and unemployment is also starting to move higher. So we're seeing some cooling off in the labor market, and that's exactly what was the discussion in light of the progress made both in lowering inflation and in cooling the labor market over the past 2 years. Elevated inflation is not the only risk we face, is what Jerome Powell mentioned, and reducing the policy restraint too late or too little could unduly weaken economic activity and employment. But Powell also says that lowering rates too soon could stall or even reverse the progress we've seen on inflation. And this has been our topic of conversation for a very, very long time. And I've mentioned this time and time again. I've mentioned this before, that for Jerome Powell and for the Federal Reserve, it is really important that they prioritize bringing inflation down first and then focus on making sure the economy doesn't essentially go off the rails and unemployment starts going up. And the reason being is, once again, the risk of cutting too early is far greater than the risk of cutting too late. The risk of cutting too early essentially is the second point, the second bullet point here, that Powell also says that lowering interest rates too soon, right? So cutting interest rates too soon or too early could stall or even reverse the progress that we've seen on inflation. So that is the very, very important part, that if they actually cut interest rates too soon, inflation is at risk to reaccelerate back higher. And that is not what we want to see, because again, it takes much longer to raise interest rates than it takes to cut interest rates. Interest rate hikes are a much longer process than it is than cutting interest rates. So for that reason, it's much easier and it's more advisable that they actually take it slow and be a little bit, of course, patient with cutting interest rates, because once they cut interest rates, that signals the economy that, okay, quantitative easing is getting started. There's going to be, once again, an environment for somewhat cheap money. It's going to be easier for companies and households to save, invest, and spend. And as a result, it's going to put more pressure on prices once again. And we only want to do that if there is actually a lot of pressure on the economy, when unemployment is actually going crazy high. There's a lot of people out of jobs, and inflation is also down at the Fed's target of close to 2% or lower. Because anytime other than that, it's really going to cause a lot of problems, because inflation could be at risk of moving back higher, and the economy could be getting that unnecessary boost or stimulus, and again, resulting in inflation accelerating back to the upside. So that is something to keep in mind, that we've talked about this before. time and time again. Senator John Kennedy, again, comes in with the heat, asking Powell bluntly, so when are you going to lower interest rates? Powell said on Tuesday that he was not going to send any signals about the timing of any future actions. And the big picture is that Powell appeared before the lawmakers at a tricky moment for the economy. Inflation is well below its peak, but still higher than the Fed's 2% target. And at the same time, the most recent jobs report shows unemployment is rising. The jobless rate rose to 4.1% last month, the highest level since 2021. And while unemployment has moved higher, it still remains at a historically low level. Still, he acknowledged that recent data sent a pretty clear signal that the labor market is cooling. And again, of course, some Democrats, including Senator Elizabeth Warren, previously called on Powell to lower interest rates on Tuesday. Some Republicans stopped short of joining those calls, but they brought up concerns about the economy's health as well. It was a very, very political debate, especially considering that elections right around the corner. And I'm concerned that if the Federal Reserve waits too long to lower interest rates, the Fed could undo the progress we've made on creating good paying jobs. And I'd be very careful with this economy. People just don't feel better off today, is what Senator Kennedy also mentioned. So again, Jerome Powell coming in the crosshairs, of course. He's got one of the most important jobs in the United States, not to mention in the world, considering that 25% of the economy is in the United States. And of course, it's the biggest economy in the world, with, again, the central bank chairman Jerome Powell has got a lot riding on his shoulders because of the fact that this, again, is a very, very important decision to make. Not only are the U.S. economy and the U.S. people are going to be affected by this decision based on interest rates, but even in the entire world as well. Powell said the recent increase in immigration to the U.S. has helped take some heat off the labor market, and it's a little bit more neutral in the long run when it comes to inflation. In the short run, it may actually have helped us because the labor market got looser. In exchange with Senator J.D. Vance, Powell added that higher immigration rates might add to an already tight housing market in some parts of the country as well. So those are some things to keep in mind. And again, before we move forward to some of the other parts of the market news here, so this right here is the catalyst, or essentially the expectation from the market, where the next meeting, of course, happening on July 31st, 95% probability that rates are going to stay where they are, 70% expectations that rates are going to get cut in September. September is when the markets are expecting for the rates to get cut down, and again, stay there for another month, and December with another cut expected. So 2 more rate cuts is what the markets are pricing in. And this right here is the calendar, with tomorrow another testimony in front of Congress from Jerome Powell before the U.S. House of Financial Services Committee, and that also begins at 10 a.m. Eastern, for which, once again, I will be live to cover that report as well. CPI numbers coming out later this week. So again, on Thursday, June 11th, we've got the Consumer Price Index, 0.1% consensus month over month, and 3.1% year over year, and core CPI expected to accelerate back up to 3.5% on a year over year basis. So again, we'll find out how the markets respond and react to these numbers. Now, Bill Ackman is behind the market. Now he's launching the biggest closed-end fund ever. For those of you who don't know, closed-end funds are kind of like a mutual fund with a limited number of shares, and once they're issued, you know, there's no little to no dilution. And again, Bill Ackman is coming out with a Pershing Square USA fund of close to $25 billion. And he's doing road shows apparently, and the ticker symbol is going to be PSUS, so PSUS is going to be that number, and the deal is expected to be priced early in the week of July 29th and at $50 a share. So that's going to be something. So we'll see how that performance ends up being. Bill Ackman is trailing the market this year because of the lack of involvement in Magnificent 7. Of course, doesn't have a lot of companies in Mag 7. But speaking of, Microsoft, Oracle, Adobe pulling back a little bit, Apple slightly higher, Google slightly down, Meta slightly up. But of course, majority of the liquidity, majority of the money flowing into these 2 big names. Tesla, which is now finally back into the top 10 largest companies in the US, and NVDA here up almost 2.5%. Eli Lilly also up about 1.5%. So industrials, real estate, utilities, basic materials, energy, everything pulling back and selling off. And this right here, of course, Broadcom, semiconductors also rolling over, with the exception of NVIDIA, and Tesla, of course, pushing up. Apple, Google, Meta, Tesla, NVIDIA, TSMC, Broadcom, AMD, ARM, everything pushing higher with energy. We had industrials, we had a little bit of a healthcare technology pulling back here on the day. And financials, healthcare, utilities, consumer cyclicals all pushing higher with energy, materials, industrials, consumer defensives rolling over. In the last 1 week, all sectors are up except for energy that's struggling a little bit. And in the last 1 month, again, most sectors are green. Actually, it's been a little bit of a split with technology and comm services and consumer cyclicals pushing higher. Everything else is rolling over. Bitcoin just a little bit under $59,000 and Ether is just over 3,100 at the moment. Now, bets against Apple, NVIDIA, and Tesla stock are blowing up. So short sellers lost billions of dollars in the second quarter betting against some of the market's biggest, most popular stocks, including NVIDIA, Apple, and Tesla. And short sellers, of course, borrowed money and they have lost a significant chunk of that position in the second quarter, considering that all three companies, all three stocks are now up on the second quarter here. And short selling was on the rise in the second quarter. Short interest in the US and Canada increased by $57.9 billion or 5.1% to $1.2 trillion in the second quarter of 2024, according to S3 Partners, and about 84% of the increase was concentrated in the tech sector, and that wasn't such a good move. The three least profitable short positions in the second quarter were NVIDIA, Apple, and Tesla, and short sellers lost almost $16 billion on that trio, according to S3. NVIDIA stock gained 37% in the second quarter, Apple was up 23%, and Tesla gained 13% in the second quarter as well. And of course, Tesla has the highest short interest of almost 4% of available shares, and that's higher than average, and investors can understand why, because of course, so much debate around Tesla stock. Now, coming over to the market, so starting with S&P 500 here, so we did see a little bit of a red candle with a 7 basis point green day. There's not a lot of momentum here. There's not a lot of movement or liquidity in the markets at the moment. RSI, of course, overbought at over 77. So is the MACD. So is the price. So again, would not be concerned, would not be surprised to see the markets roll over just a little bit. There's been, again, a lot of consolidation sideways here for S&P 500 before breaking out to new all-time highs at just under 5,600 high for today, 5,590, and that's also the new all-time high for S&P 500. Support level stays put in the near term at 5440, and that's going to be about a 3 to 4%, about 2.5% pullback or a quote-unquote dip for the S&P, which again is nothing to be going crazy over. It's a very, very normal pullback for the S&P considering how much we have moved higher. Same thing with the NASDAQ. So again, very overbought on the RSI. The price itself up 14 basis points on the day with a red candle here. This right here was a consolidation, then finally break out to new all-time highs. And if you do see a bit of a pullback, support level is going to stay put at 17,921 for the NASDAQ, all the way down to as low as 17,500. So we got 18,000 down to 17,500 as a couple of support levels to watch for the NASDAQ. Of course, trading at well over 18,400 for the first time ever for NASDAQ here. The all-time high at 18,500 for the NASDAQ. Now coming over to volatility, as it continues to stay low at 12.5, we are once again in a very rare 10 to 12 percentile range for the VIX. Resistance, not really quite a resistance, but really levels to keep in mind at 15 to as much as 20 to as much as 22. Those right there, very, very important levels. And of course, inside this red rectangle are going to be some levels to keep in mind for the volatility. Again, we have seen the VIX continue to trade at pretty low levels, although we have seen some spikes in 2024. This right here was back in March and April, 70% spike. That was the last really good buying opportunity in my opinion. And prior to that was back in September and October of 2023 as well. So this right here was the rally of another 81%, again representing a very solid, very good buying opportunity for us. Now coming over to the MoneyVest index, which again is something that we have been tracking very, very closely. This is a index that I have created with my team member, and we have essentially taken into account a lot of other calculations, including volatility, market breadth, concentration, and again, the percentage drawdown that we have on the S&P 500, the RSI readings, everything. It's a combination of a lot of different factors, and it's proven to be very, very successful for myself and right now we're trading at 3.72. Eventually this is going to make its way over to the platform as well. So this right here, of course, as you can see, is the MoneyVest platform. Again, you can access this with a link down below, and you can do a full fundamental analysis on any company, any stock that's listed on the New York Stock Exchange or the NASDAQ. You can conduct your entire analysis on these companies. And on the left, you can see that we've got the portfolio dashboard. We've got some investment management sort of features here, community dashboard, courses, and eventually there's going to be a macro dashboard as well, where you can access a lot of analysis, including interest rates, the S&P 500 fundamental technical positioning, as well as the MoneyVest index, and again, a lot of other actionable creative analysis that we're going to be providing and research on the platform that you can access and make better, more informed, confident decisions when it comes to your investing journey. So again, link's going to be down below. We'd love to have you on board, but MoneyVest index right now at 3.72, and again, the lower it gets, the better it is going to be. So we're just waiting for this number to get down to, let's say, 2.4, 2.5 before we start deploying cash and being a little bit more aggressive when it comes to investing in general. There's no harm in dollar cost averaging a little bit every week or every month as you are following your process. So that's going to continue for as long as you want, but this is more of an index to help us better identify how is the risk and reward in the market. Is it favorable? Is it not so favorable? And the lower it gets down to, the better it is going to be, because that's going to represent better risk reward ratios, and it's performed really well because the last serious buying opportunity was back in April 20th, right? So April 2024, right around here when the MoneyVest index was down at 3, and prior to that, of course, was back in September, October of 2023 as well. And so far, we haven't really seen this number come down in the yellow zone. It's been in the red zone for quite some time. So keep in mind that this is a very, very important number to keep to, of course, watch. Now, crude oil is starting to come back down, so support level is going to stay put inside this green rectangle at the moment, and this is going to be aligned with this support level over here at $80-81 a barrel. And of course, below that, we're going to be watching $73-74 a barrel for crude oil as well. And again, this is one of the reasons why energy stocks are rolling over a little bit this week, is because of the fact that it's down 4%. Crude oil is down from $84-85 a barrel down to low 80s. And again, if we do end up breaking down, the next support is going to be down at around $73-74 a barrel as well. Now, because crude oil prices have been increasing a little bit, so you can see the last month crude oil was up a little bit over 5.6%. It's possible that that affects, of course, the overall CPI numbers, inflation in general, and that's exactly what we're going to find out on Thursday, June 11th. And right now we can also see a little bit of a symmetrical triangle, so a much bigger breakout or a breakdown, much bigger move in general is coming on crude oil very, very soon. Now, going back over to the markets here, talking first about Apple stock, and Apple here once again continues to trade near all-time highs at $228. Absolutely incredible recovery from those lows of 163. It's rallied over 39, almost 40% rally since the beginning of this tier 1 support inside this green rectangle for Apple stock. But of course, right now, very, very overbought on the RSI, on the MACD, on the price action itself. So Apple is one of those companies and those stocks that, for me, technically very overbought, not really buying at these prices. This right here was a good trade idea for us, as kind of identifying that tier 1 support, and since then it's already rallied almost 40%. So support level is going to stay put down at $206 and then back down to some of these levels that we had already identified in our previous videos. Talking about Amazon stock, so Amazon here also coming up to its resistance at close to $200 per share. And that right there, again, is a level that's really struggling to break out of. It's not able to break out of that resistance very well. Support level is going to stay put down at $188 per share, kind of aligned with that previous resistance, all the way down to $171 for Amazon as well. Tesla, I will be doing a more dedicated separate video on Tesla because of the fact that it's rallied so much, up over, I think, a little bit over 60-70%. So 56% in the last couple weeks alone. Very, very overbought, as you can see, the RSI, the MACD, and the L3 banker oscillator. The Wall Street continues to be very excited about the fact that Tesla is, of course, doing really well with regards to robotaxis. And again, it's got that Optimus, robotaxi day coming up. And then, of course, we got the Optimus, and really just starting to look at the company once again from a technical lens as opposed to an electric vehicle lens, because even up until today, I saw, again, conversations on CNBC, on different platforms, where Tesla's valuation is still questioning. A lot of people are questioning Tesla's valuation. Sure, you can make a case for why it may be overvalued even as a tech company, but there's a lot of people that are still questioning whether Tesla deserves to be trading at these levels because it's an electric vehicle company. Right, so there's a lot of debate going on. Once again, something that we've already experienced over the last 5-6 years. But Tesla here, resistance going to be staying put at 262 for now. We'll see if we actually break out above this level, and the next target is going to be inside this red rectangle, sitting roughly between around 275 to as much as 310. So that $25, $35 range is where the next resistance and area of supply sits for Tesla. We did a poll in our community earlier in the day. We asked everyone where Tesla is going to be by the robotaxi day of August 8th, and the majority of people, I think 44% of the people, voted for Tesla being well over $300 by the time robotaxi August 8th day comes around. So again, the optimism is very much there. There is a lot of bullish sentiment on Tesla, but we have to be objective and understand that, okay, it is overbought. It is incredibly overbought. So I wouldn't be surprised to see a bit of a pullback or even a correction in Tesla stock. Something to keep in mind considering how overextended we are on the price action. Talking about NVIDIA platform, NVIDIA here. NVIDIA on the day, of course, pushing higher to 2.4%, almost at a new all-time high of $140, but of course trading just over 131. And this right here is going to be the resistance to keep in mind, around 141. So that's going to be, of course, the all-time high, and a lot of consolidation sideways in and around the support of $118 per share. So there's a lot of consolidation sideways here. Again, continues to trade in that upward trajectory of higher highs and higher lows. So this right here is the higher lows, and this right here can be considered as a bit of a higher high for NVIDIA as well. So very nice uptrend for the company that it continues at. Resistance at 141 for NVIDIA. Talking about advanced micro devices, and AMD also on the move. Support level is going to stay put here inside this green rectangle, sitting roughly in the 150s. We did consolidate sideways for quite a bit, and then of course sold off, and then right started to push back higher. Resistance and target's going to be sitting roughly at 182, 183 for advanced micro devices. Not quite overbought just yet, but of course getting up to that level. So resistance, like I said, it's going to stay put at 182 for advanced micro devices. Talking about PayPal, and PayPal here on the day down about 15 basis points, continues to struggle, not really doing anything, just a consolidation period inside this green rectangle for PayPal. Of course, getting rejected once again at this resistance, as it always does. It's gotten rejected at those levels not once, not twice, but I believe 3 and 4 times. So once, twice, 3, 4 times it's gone rejected at this resistance of $68 to $70 a share, and support level is going to stay for roughly at $56 for PayPal, in and around those prices for the company. So that's going to be the one level to keep in mind. Talking about Visa. And Visa, a lot of you guys have been asking for analysis on Visa, so I will be doing a full fundamental analysis on this company very soon. But right now we're starting to see a little bit of a breakdown below this support level for Visa, and the next support is going to be all the way down here at $252 per share for this stock, and resistance is going to stay put all the way up to $282, $283 for Visa. So this right here is going to be the level to keep in mind for the company. Right now we're seeing a bit of a breakdown from this area of symmetrical triangle and consolidation for this company. Talking about Meta Platforms, and Meta here also trading pretty much near all-time highs of $530 a share. Massive support inside this green rectangle, say roughly in the 520s down to as low as 470s. Those right there, that's going to be pretty much the range within which it's been trading for a really long time, and a lot of consolidation sideways in and around those prices. Talking about Netflix, and Netflix here also continues to trade pretty much at near 52-week highs. Resistance is going to stay put roughly around $699, close to $700 a share. And I believe Netflix is one of those companies that has the highest growth potential among FANG stocks. Because if you come over to Netflix here and come over to fundamental analysis under analyst estimates, what it has really is a growth rate, a long-term growth rate, we're talking 5 to 7 years out, of well over 24 to as much as 26, 23%. That is a really, really high growth rate for Netflix compared to any other FANG stock out there. So that is something to keep in mind. I will be doing another video going over FANG stocks and the highest growth potential FANG stocks that we can also analyze and look at. But for now, resistance is going to stay put at 699, close to 700. Support level here at close to 654 for Netflix. Talking about Google, and Google here on the day slightly down, but again trading pretty much at all-time highs. Overbought on the RSI and the MACD, so just got to be incredibly careful with the fact that, okay, it could start to roll over a little bit. Support level is going to stay put down at 179 down to 173 for Google as well. Talking about Microsoft now, and Microsoft on the day starting to roll over a little bit, down about 1.4%. Again, RSI back the L3 banker oscillator, everything on the overbought level here. Support level is going to stay put down as much as 432 for Microsoft as well, all the way down to 417 for this company. And last but not least, we come over to Enphase and Costco. So Enphase here starting to see a little bit of that recovery once again. Oversold RSI, oversold MACD, very, very oversold L3 banker oscillator as well. So there is potential for us to see some type of a reversal trade on Enphase, considering there's a massive resistance for Enphase over here as well. It needs to break out back above $105, $106 in order to once again retest up to as much as 138. Similar to PayPal, it's gone rejected at these levels once, twice, and 3 times. Very strong area of supply and resistance for Enphase in and around those prices at the moment. And finally, we come over to Costco. And Costco here trading pretty much at all-time highs, well over $886. Incredibly overbought in my opinion. Support level is in the near term going to sit somewhere over here at $839, $840, all the way down to $785 per share. So hope you all enjoyed this video and a complete update on the entire market and of course some of our most important trackable stocks. Make sure that you drop a like, subscribe to the channel, and again, links to our Discord and Patreon is going to be down below if you want to join. As soon as you get access to the Patreon, you will be eligible for early access to the beta launch of the MoneyVest platform. So links going to be down below. We'd love to have you on board. There is a 51% discount that you can avail right now, and of course, lock that pricing in for life. And again, of course, until you cancel. And there's a lot of other features and tools and calculators coming on board in our future updates. So as always, happy investing. I'll see you all in the next video.